You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views at cyclesman.com. Welcome to the show, Tim.
Jim, thanks again for having me.
Well, we had a major downturn in the markets earlier this week, a bit of a bounce back. Where are they right now on your charts? We were going to talk about parabolic advances and how quite often the public never sees what's about to happen, even though the evidence has been in their face for months. So maybe talk about that.
Yeah, I still think we're in the midst of, the final stages or semifinal stages of the last innings, let's say it that way, of a very, very extended 4-year cycle advance. And I think that the public never, it's true, they never see it. In fact, there was a quote I found in a book that I mentioned in my last research letter. Not that that's a big deal, but the quote just it fit, and it was from James Frazier's little booklet that he wrote, or he says titled "Crisis and Panics," and he says inevitably, as in most cases, and I'm paraphrasing this because I can't find it, but he says, inevitably, in the case of most crises and outbreaks, the obvious rupture comes as a surprise. And he goes through example after example after example, from way back in the 1700s. And you're right, people never, ever, ever see it coming. Be it the panic of there was a world credit crisis in 1873 that he wrote about. No one saw that coming. The world crisis was in 1907. The credit crisis was in 1907, and he talked about how no one saw that coming. 1873 was another one. The 1929 top, who saw that coming? I mean, the market was at a new high, right? And you read the articles and you look at the stuff that was written about the time and how we had reached a new permanent plateau and all these kinds of crazy talk. No one saw that coming. 1966, that bull market top. You read some of the writings and stuff about that, and markets at a new high. I mean, all's good, right? The rally out of the amidst the bear market in that 66 to 74 time period, we have data that shows at that 73 rally, which carried the market to a new high, that the investors' intelligence bullish sentiment data was, I don't want to put words and misquote it because I'm not looking at the chart, but if I'm not mistaken, that may have even been an all-time high or dang close to it. I know it was at a higher level then than it is now. And, again, people, they didn't understand that was a bear market rally. They didn't understand that we were at a high. And so what I'm trying to say is that at every high, people are always euphoric. They always think that extrapolated that price can only go higher, and they never see what's coming. And this insanity that we've been dealing with now since 2000 with the Fed pumping and pumping and pumping, and it created the bubble into the 2007 top, which nobody saw, and now this one, and all of a sudden the insanity is normal, and someone saying that this is a bubble and this is a bear market. No, that's the insanity. And so the roles are, it's kind of reversed, if you will. But no, I think that this is another parabolic type advance, just like so many other in the past, and it's going to end just like so many of the others in the past.
It is the old saying, what goes up must come down.
Well, let me give you some examples, and I'm working on an article that I will get to you when I get it finished up. But just in kind of going through this, if you look at the NASDAQ, and I was there, I was involved in the tech bubble and the cellular business and so forth back in the late 90s. I mean, I worked for one of the large cellular companies, and it was crazy the things that was going on there in the tech world. But you look at the NASDAQ 100, and I mean, there was 4-month period, and I'm picking this out of this article, but there were 4-month periods where you had over 100% advance. And there were periods in 12 months where you had 150% advance. I mean, the thing just went straight up. And people expected that to be sustainable. I mean, I remember it. And to date, 15 years later, we still have not made it back. Now, we're close, but it's been 15 years. And we still, in spite of all of the efforts by the Fed and trying to, the liquidity infusion that we've seen, we still have not gotten back to that high. And the other point there is that one of the characteristics of these parabolas, these parabolic moves, just like we saw when it ramped up into the 2000 top, just like we saw when the market ramped up into the 2007 top, is it's completely erased. And when you look at the chart of the NASDAQ in 2000, that parabolic advance was completely erased. And I'm not just picking cherries here. It's just the way it is. It's you look at any chart. But another example, if you look at the Shanghai, I don't know if people remember this, but back in 2006, 2007, 2005 time frame, everything that was going up because of China. I was at a investors conference in New Orleans during that time. I actually this was in 2007 specifically, and I gave a presentation showing that we had the DNA markers in place and what should follow with the 4-year cycle top. Gave it at the conference, laid it out, and it came to pass perfectly because the DNA markers were in place. But all I heard at that conference was China, 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 China. I wanted to vomit. I heard about China so much. Everything was going up because of China. Commodities, China, 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 everything, China. Well, if you look now, you look at this chart, that we had the same type parabolic advance. The entire parabolic move was erased. And I think we're still I think we're down 40-something% off of that high still from that top. And there's just example after example after example of how these extreme moves, if they last long enough, people accept them as a new norm. And think about oil. Back in 2008, at that top, when we were at 144, 5, 6, whatever dollars a barrel. I remember that well. Made the call publicly that we had seen the top based on DNA markers and so forth. Made it on the air with my buddy John Grant and on Financial Sense. And what people don't understand is that back in 2000, and I'm looking at the chart, back in 2002, after 9/11 event, in November of 2000, wait a minute, this is 2001. In November of 2001, oil was at $16.70 a barrel. And but from there, it went up and went up and went up and went up, and then it went parabolic starting in 2006 and went to $140-something a barrel. We saw the markers. We called the top. People thought we were crazy. I was told I was crazy. I got emails telling me I was nuts, that Stevie Wonder could see that oil was going to $200 a barrel, and all the talk about peak oil. Remember that? I remember seeing it on TV that the T. Boone's Picking guy was talking about peak oil. Well, what happened to that? And so what I'm saying is that these parabolic moves, people buy into them to try to justify in their mind what they're seeing and rationalize that it's normal. And so I said all that to say this, and again, I'm not picking cherries. I stick to my analysis because it tells me what it tells me. And when you look at a chart, when I get this article out, you'll see it. But the advance that we've seen, I've heard people say, well, we need to have a final parabolic, and maybe we do. Maybe the parabolic, it's hard to pinpoint, the exact tip top, of a parabolic advance, or at least I can until I see my DNA markers. When I see the DNA markers, then I'm done. And we're starting to see some cracks. Is it 100% in place? I don't know yet. But like I said, we're in the last innings of this thing. But my point is that when I look at that chart, we're in a parabolic move. And yeah, there could be a little more left, or this thing could fall in place pretty quickly. That's what we're monitoring. And in hindsight, people are going to look back at that and go, well, what was I thinking? they'll be able to see it. But right now, the market is at a new high, or virtually at a new high. Sentiment is extreme and are extremely bullish, and there's no fear, and people don't understand. They can't see what they can't see. I get that, but this is no different than the crude oil rally or the NASDAQ rally in 2000 or any of these other parabolic advances. I think that once the setup is in place, the DNA markers are in place and confirmed, I think that we retrace the entire parabolic advance, just like any other parabolic move. And I think, I still say that this has occurred within the context of a secular bear market. I know that sounds crazy, and I'm not saying that based on price. I realize we're at a new high, but the market can move to a new high within the context of a secular bear market. And people, I just don't know how to explain that. It's about the characteristics of the market, not the price level. And like I said, everybody knows there was a bear market between 66 and 74, but not everybody remembers that there was a move to a new high in 1973 right before the final crash into the low. And so it's about the characteristics, the environment in which the price activity is occurring, more so from my seat than the price level itself. And so what I'm saying is that this is a smoke and mirrors parabolic advance. Everybody's trying to justify it. Nobody can see it. And it's no different than any of the others.
We'll have more with Tim Wood right after this.
More and more people are looking to the Internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking to Tim Cyclesman Wood. Tim, what's going to happen with the price of oil? I've heard divergent forecasts right now, where some people feel if it hits $70 a barrel, then $120 or $100 a barrel oil is realistic. Others saying this is just a little rise up, and then we're going to see another. This is just, I guess, a bounce from the new low for this year, and then it's going to fall lower. What are your charts telling you?
I think it's a bounce that's going to fall lower. I think ultimately, and this is based on mathematics. I wish I had that chart in front of me to talk, but let me just kind of paraphrase it. There are norms, if you will, relationships, and for example, I looked at there's a dollar crude oil relationship, and it tells me that with oil at the levels it was at, that was an extreme, and that we're going to, the reversion to the mean with that relationship takes crude oil back into the 30s. And so I think, based on the cycles and based on that mathematical relationship over time and the reversion to the mean, I mean, it's just hard mathematics. I mean, you can't, it's not something that is up for debate. It is what it is. And, you can clearly see, like a ping pong ball, we bounce back and forth, back and forth, back and forth. Well, again, crude oil, just like everything else, all of a sudden it's been high enough, long enough, that seems like a new norm. And it's not. It's an extreme. But where we're at with crude oil is, we have a bounce and there's some seasonality to, the low that we've seen in here. Typically, crude oil tends to, you get into the summer driving season, that tends to give some support. I don't know how much support we're going to see this year, because of the longer term cycles that have turned down. In other words, I don't know exactly how much the seasonal effect is going to have, with this bounce. It's going to go up until I get intermediate term sell signals, and then that's going to be it. Then we get an intermediate term sell signal and the counter trend rally should be over. But right now, we still have an intermediate term buy on it. I think it's a counter trend bounce, and I think ultimately oil is headed into at least the 30s.
And one analyst I saw, I mean, I know you're going strictly by cycles, but he said right now they're still producing 2 million barrels of oil a day more than what the earth consumes. they're storing it right now, but he said all the oil tankers and land-based tanks are being filled very rapidly, and he believes by May they're all going to be full. Now what are they going to do with that 2 million barrels a day extra that they produce? He said there will be literally fire sale prices to try to move that oil out.
And that's what's driving the cycles. And see, all of this stuff, that brings up another point that we've talked about before. You know, everything known to man, and this was Charles Dow's, you know, the Dow theory guy's philosophy. But everything known to man about any particular market is discounted into price. So I'm looking at this cycle saying, you know, the longer-term cycles have turned down, we're going lower. Well, that information about those excess supplies is discounted into price. And I'm reading price, reading the cycles, looking at the indicators and so forth, and it's telling me that. So it's reflective. Those fundamental issues are reflected in that price action. And so, yeah, it matches.
You also mentioned you had concerns about real estate right now.
I do. I don't have any hard data yet with, you know, in terms of the DNA markers. And you know, I don't know anything about real estate as far as buying, selling, developing. You know, I have no expertise there whatsoever. But, you know, I live in a vacation area, kind of in a retirement community area on the Gulf Coast, and I was here in 2003, 4, 5, 6, you know, obviously during the period with the housing boom, and I saw the craziness going on, and again, it was nuts. And I may have told the story before, but I'll tell you again. I remember a realtor talking about them being in their offices and getting phone calls and saying, hey, I got a 3-bedroom or a 2-bedroom, whatever, you know, condo and complex, whatever. And, you know, it's listed at that, and somebody'd say sold, you know. And it was like a trading room, like on the old pictures or visions of the floor on the New York Stock Exchange. You know, somebody to get a listing and it's just gone. And you heard those stories. I saw the craziness there, and I watched as price went parabolic on the housing index charts, and then I saw the classic setup, the DNA markers, if you will. It's about structure. Part of it's about structure, and I saw it set up, and I'm like, and I did a series of articles saying, okay, here's the issue with this, and if this happens, then you know it means this, and it just bada bing, bada boom, it just fell right in place with those markers, if you will, those structural markers to cap it. Well, what I see now is that we've had a pretty good counter-trend bounce in crude oil. In housing, and it's risky now. It's risky now. It is at risk, and I could see where when this equity market does finally, you know, the DNA markers there fall in place, and we do finally get the setup, that housing is going to be hammered again, right along with equities and everything else. Because, you know, people don't understand I know that some may have been listening to this interview and they're saying, well, he's been saying this for forever. Yeah, I have. And I'm not a Johnny-come-lately here. You know, I know that there are some people that are jumping on this bearish economic collapse bandwagon in the last year or so, and, you know, I've had people send me stuff. I've been saying this since 2000. I said when the rally out of the 09 low began, that it's specifically what I said was three things. I said the longer it lasted, the more convincing it would become. But that it would go up until we got the DNA markers in place. And we've seen it try, but it hasn't gelled yet. You know that, you're following the letter. And then once it did, and that it was a bear market rally. And so all of that is true. I still stick to every bit of that. And then I think that once we do get the markers in place and confirmed, I'm not talking about just a little decline here. I mean, I think we're going to see a global deflationary, depressionary type bloodletting that was going to make 2008 look like a picnic. I'm bearish as hell once we get the setup.
Tim, thank you very much for chatting with us.
Jim, thanks for having me.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. You're listening to HowStreet.com radio. Check out our popular YouTube channel, Talk Digital Network. You can also find us on Twitter at TalkDigitalNet. Comments about the show can be sent to info@howstreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.